to, pulling money together like syndication, because that is a whole another animal because it's a larger, but it's a whole lot better. I've met so many friendships, so many partnerships through that, but it took me getting past that mind block and limiting belief. I had so much limiting belief of it sounded too good to be true until I started seeing, properties go full cycle and seeing, I'm like, oh my gosh. And once I got into see, and I'm like, I wish I would have learned about this so much sooner.
Welcome to the American Dream Builder and Investor podcast, where our vision is to inspire busy professionals, especially first and second generation immigrants and Americans, to explore the state of the American dream in 2022 and beyond. That is the Trinity of Freedom: time, financial, and geography freedom. I'm your host, Missy Liu, and I have achieved financial independence, and I'm helping many others to do the same. I started out with $5,000 and have really built wealth for my family along the process. Now I'm on a mission to help hundreds of thousands of people like me to do the same.
Hey, welcome to another episode of the American Dream Builder and Investor podcast. I'm your host, Missy Liu. Today, we have a special guest that also appeared on our last episode, Dr. Nguyen. Last episode, she talked about her journey to entrepreneurship, starting as a medical student that was raised by her single mother to running two successful eye practices and also her own syndication business now. Now, along with that, we wanted to really dive into her investing portion now, how she realized the value of time and how she started passive investing, and also what are some of the key things she learned as a passive investor. So without further ado, let's dive in. So you started with passive investing. What were some of your big concerns stepping into it? Because Jaime, what you say was probably a scam and this and that. And a lot of people were probably having their thoughts. What was your due diligence process as a passive investor first?
Yeah, so, the passive investment, when I first joined, it was part of an ecosystem, right? And so became friends with them, started passively investing with them. They already had at least a few properties under their belt or a lot more experience. And so just becoming friends, investing with them to see how they actually do business. And the end goal was to eventually become active. But I wanted to actually see their monthly reports or quarterly reports they talk about. I wanted to see the cash flow. I wanted to see that this actually was a true thing, right? And so going active, like when we first started our investing journey, it was all our own money. And so that was a different journey than transitioning, wanting to do an active general partner, because then it's other people's money that entrust you. And so that was a huge block for me to get over and get more comfortable with, because I wanted to make sure as a passive investor that everything was the way it was. And I wanted to learn more in depth of the financials and deep dive. And I visit, even as a passive investor, I personally go visit the property on site. It gives me a sense of pride that even if I have a sliver of that small piece of, I'm like, it's a tangible asset. I can drive to it. I can see it, and I get the updates on how it's doing. And so I really enjoyed that, But the due diligence of getting to know the people at the core, how they do business, and not just the numbers. I mean, how are they in general in life? And is that something that aligns in value? And is that someone in the future I would want to be a co-GP or general partner and do business long term with? And so that was kind of the process of going from your own money to, pulling money together like syndication, because that is a whole another animal because it's a larger, but it's a whole lot better. I've met so many friendships, so many partnerships through that, but it took me getting past that mind block and limiting belief. I had so much limiting belief of it sounded too good to be true until I started seeing, properties go full cycle and seeing, I'm like, oh my gosh. And once I got into see, and I'm like, I wish I would have learned about this so much sooner. And why are not more people educating about this, But it took time. It took time for me to really understand it, see the business, learn it, be in it before I transitioned to the other side.
Yeah, definitely. I think you talked about some of the things that some people may have worries about. Oh, is this a scam? And So I think having facts like, can I see the cash flows from the last properties you've done, or, the monthly statement, how things are going full cycle, even visiting it if your time allows, definitely helps with that. And you talk about the sponsor piece, which is critical in making a deal successful. We also have episode 23 and 24 that talked a little bit on some of the similar things you mentioned as well. Definitely investing with the right person is key. So I think you invested 25 to 27 deals as a passive and general partners. I'm not sure how many of that are actually passive investments, but were there any deals that went extremely well and deals that didn't meet your expectations? What were the corresponding actions you took or what you learned from that experience?
hmm So, of the 27 apartment communities, we're general partners on 13 of those. And so we obviously invest in all of our own deals heavily as well. What I've learned, I mean, as far as pro forma, we've had 6 deals go full cycle. Of those 6, 5 of those we are LPs and limited partners, and one of those we were co-GP. And so all of those did beat pro forma. But again, the market was hot, right? And so everybody who knows investing the past few years, as long as, you bought in the right markets and you were even a decent operator, you pretty much did well. Now times have changed, right? And so now with everything going higher, you'll really start seeing operation and really more, stronger asset managers, the stronger operators who can really fine tune and overlooking the management and cutting down the expenses and where can they really create more income sources. And so the minutia and the detail, there's a lot of back of the scenes that investors don't really see that goes on in really managing a property and looking and deep diving into a property. But so far, I mean, all of our properties of this 27, even through COVID did get me scared a little bit, especially with the eviction moratorium. Most of our properties are AB assets. We do have a few C properties that we were passive investors in. But honestly, because we heavily invest in Texas, and so a good bulk of our portfolio is DFW in Houston. And then we do have the one that went full cycle, and it was in South Carolina. And so they were all really good markets. And so the returns were quite a bit higher in the 2.5 year time frame compared to what we perform in 5 years, right? And so those sold early and did well. As far as pro forma now, some of the new properties that we did that were bridge lending and anything that had an interest, like we bought an interest rate cap on all of our properties, but obviously anything with the interest rates increasing, now it cuts into some of that cash reserve, right, for that first year. And so distributions are going to be lower or they're going to be delayed because of that. So that's more the recent of what's going on in the market. And so the good and the bad, the past 3 deals that we did as general partners, lending environment has been, tricky. And so lending last minute kind of lowered the proceeds and kind of retraded on us. But it gave us an opportunity to negotiate again with the seller and talk to the broker because they know what's going on. And so we were already ready to close, and this is happening a few days before closing. And so all 3 of our last deals, we were able to get them at discounted pricing. And so our investors get a better deal. But it was scary because I was like, they're changing terms on us. And, it's $2 or $3 million. It's not chump change, but we were able to all negotiate that properly and to be able to finish the line. But I will say there are a few deals that properties are doing great, but we want to hold some of that cash reserve because I think during environments like this, having adequate cash reserves and cash flow for rainy days or emergencies is critical.
Definitely on the cash reserve part, I'm putting 2+ on that. I agree. Actually, yesterday I spoke to a passive investor who just experienced a capital call from another sponsor. And that's the last thing I would want to do for my investors. So having enough cash reserve, especially coming out of COVID, right? Like so many small business went bankrupt. I'm not just talking about real estate, other ones, because they didn't even have enough cash reserve for 3 or 6 months because they were just operating on in and out standpoint. So I'm glad that you guys are putting enough cash reserve to help with that.
Yeah, and that's key. That is key. I mean, having underwriting conservatively, having the adequate cash flow, communicating properly with investors to let them know what's going on, good or bad. And so, fortunately, we've never had a capital call as an LP or GP yet. And so I would say of the different asset classes, because we diversify quite a bit too, but multifamily is still the best performing and still the most resilient asset class. And I vouch by that because we're in all sorts of stuff, hotels, Airbnb, land, commercials, so it's kind of like I can tell you that multifamily still of the 27 different properties is still going to be the strongest asset class for us.
That's awesome. Yeah, I've had some experiences with those asset classes too. And I think depending on the operator, it may perform differently than multifamily. But it's interesting what, we want to come back to the point about what you said about interest rate changing. That is so true. We experience similar things with operating partners in terms of rate trading and things like that. So with the current climate, what are you seeing out there? We're recording in February 2023. What are you seeing out there in the market, and how can passive investors or even active investors look out for good opportunities, right? Considering the risks that's out there, really finding the risk-adjusted opportunities, and when they can put money in CD and give them 5-6% returns.
This podcast is sponsored by Life Mission Capital, founded by me, Missy Liu, where my life mission is to help busy professionals invest well so they can focus on what matters. All my life, I was taught to study and work hard for my freedom. Until one day, I realized that unless I let my money work hard for me, I will always be trading my most precious resource, time, for freedom. Since then, we have also been helping our investors passively diversify into more than 1,000 units of recession and inflation-resistant alternative investments, such as multifamily, mobile home parks, short-term rentals, and more. Learn more with our free ebooks at lifemissioncapital.com.
Yeah, we're still we're cautious, but we know that there's buying opportunities. During COVID, during times that there's volatility and people are sitting on the sidelines, I was at IMN and I was at a few different family office conferences for real estate. And the big guys are sitting on the sidelines. And just like COVID, a lot of the institutions were sitting on the sidelines. Those were the best buying opportunities and there's more to come. And so when the environment is like this and people are sitting on the sidelines, competition's going to go down, which means that if you're ready and prepared, that if there's an opportunity where you can buy in a good market and there's a distressed seller or they have to sell for whatever reason and it's time for them to sell, I think there's still great opportunity. But when you underwrite, you do have to account for the lending environment. You do have to account for what's happening in the market. And so rent growth and lending and cash reserves and, the expense profile, you have to make sure that you account for higher expenses and things like that. And so underwriting conservatively is super critical, but I'm still very bullish on investing in real estate more so than just letting it sit in the bank or putting it in bonds where it's low returns. Because if you hold real estate long enough, it's going to appreciate. And as long as it's a strong operator and someone that's going to be able to have the adequate cash, whatever environment it is, it's still going to do okay. It still has to just go through that line. But I think the total return on the upside, I think there's still definitely more potential of growth than letting it sit. I mean, it's too volatile for me in the stock market. I'm not going to just let it sit in the bank with inflation losing money. And stocks and bonds are low returns. And so for me, I still am bullish. The bulk of my portfolio is still real estate.
Yeah, that's how I look at it too, because right now a lot of deals are going on discount depending on the market. So now it's a good time to buy. You want to buy when it's on sale. And with the interest rate with the CDs, it may be 5% right now, but when the interest rate goes down, it's going to go down. But now it's a good time to lock in some good opportunities. And in real estate, it's very common for majority of the returns to be on the back end when we sell. So we buy low and add a value and sell high. So definitely agree with that.
That's right.
And also agree with the fact that strong operators. So while with your experiences from running operations in the eye doctor's office, that probably helped you in some cases in running operations, asset management. You're not hands-on with a property day in and day out, you have property managers that does that. But how did you convert your skill set in eye doctors' offices to multifamily management as general partner?
Yeah.
Or did you have to hire someone? And how did you pick those talents?
Yeah, so most of my co-GPs, I like to have a co-GP who is strong on operations and going to be the lead asset manager. And so all of our projects, we have someone who's a strong operator and a strong asset manager. And obviously, I'm very hands-on, and so I still want to learn that process and get on weekly calls or whatnot. But I'm not going to be an asset manager for all of our properties because then it's going to be hard for me to scale. But I want to be able to partner with someone, and that's where I'm leveraging skill sets. Because for me, I like acquisitions and equity. That's the bulk of where I spend my time. On the asset management side, I want to partner with someone who's able to be really hands-on with the minutia of overlooking the property management team. And I like to be involved, but I don't want to be the lead asset manager on those. And so that's kind of how we do and help. As far as operational skills, I do like to look at financials and numbers. And so I'm good with looking at that and being able to kind of spot if something's not right. I'm really good with teams and people in general. So even our on-site team, a management company, and just having a culture and creating a happy culture where we're not like, they don't just work for us. We're partners, right? Everyone's a team player. And so whether it's the maintenance on site, whether it's the leasing agent, we treat everyone with respect and we go visit. And so you want to make it, and if something's not going right, what do we need to do together to improve? And so I think that level of communication, whether it's your general partner on the team, whether it's your passive investor, whether it's your on-site management company and team, I think I bring that from my entrepreneurial and just where I grew up, just people skills. It's not even any particular business. It's just be kind, be respectful, communicate well, and work together as a team. Those are definitely skill sets in any avenue, but especially if you're going to asset manage and work together with the management company, that has to be a good communication where you can like fine tune and tweak weekly instead of waiting for things to explode where the property's not doing well. And just switching management companies back and like, right? And so that level, you have to be intentional of like, okay, what are your expectations of them? What are things that, we can improve, that they can improve to kind of move the needle forward?
Mm-hmm. Yeah, that makes sense. You don't have to be playing every role on the team. You just have to find the people who can do it with you. So how do you find good co-GPs? What are the metrics or things you usually check for that can say that they're a good asset manager?
Yeah. And so for us, obviously it takes us a while to co-GP with someone because we get to know them as a person first. And then before we start talking about the business, and then we do look at what assets do they have, and then look at, and ask them really. Most of the ones that we co-GP, we've already been passive investors with them too, right? Or we know somebody who's invested with them and given us feedback. And so the reputation follows. And so I go to a lot of conferences, a lot of our multifamily ecosystem. I've known people for 5 years within the group. And so just the word of mouth and then getting to personally spend time with them, set up not just Zoom calls. I like to meet people in person, get to know who they are just at the core, and then look at their track record of like, what have you actually done? Which one are you the main asset manager? And how do those perform? Right. And so you look at the numbers and things, but first I want to see how are they as a person and, just transparency on that. And then, of course, if they've had things that gone full cycle, or even if they have a current deal, how hands-on are they? Or do they just go from one to the other, but they're not really keeping an eye on the ball, even though they have a lot of units and years? For me, I like a hands-on asset manager who really keeps a good eye on the ball. And so that's important for me. Even if they're new, even if they're like, hey, this is my first one that I'm an asset manager, but I have operational and management. And like, I rather that. I have invested with one project where that husband and wife team, it was their first co-GP deal. They partnered with someone who's been in the business for 7 or 8 years and had a lot more experience. But I knew that they, as a couple, were going to be the main hands-on like asset managers. He was just kind of overlooking them, right? And for me, because I knew and got to become friends with them, I know how hands-on and how much they cared. That to me was great. And their level of communication was really good. And so those are things or metrics for me. Like, although they didn't have a bunch on their belt, I knew that that was their first co-GP, but I knew that they were extremely hardworking. Their backgrounds on their W-2 jobs were operational and management and numbers. And so I knew that that space, and they really cared about it. And they just team building like we are, they really care about the team and the culture. And so those are things where it's like, it's a different type of metric. It's not a metric, it's on paper. It's a metric you have to kind of know and get to know people.
Yeah, people is a big piece. I think that's one of the good things about passive investing with people you trust and like. You get to talk to them, understand what's happening, and have a better sense and pulse of where your money is going. So yeah, thank you, Hua, for sharing that. So we'll cover so much in this 1 hour, almost an hour of recording, from entrepreneurship, family, working together, and also investing. So coming to the end of the show, is there anything else you'd like to share with the audience before we end the show?
I just encourage people wherever you are in your journey. You know, it's really easy in our world to kind of look at other people and kind of compare. I always tell people, I would encourage people wherever you are and whatever background and whatever stage of your journey you're in, know that like work on becoming the best you. And when you work from the inner and then go out, becoming the best version of you, what you listen to, who you surround yourself with are big. Like if you surround yourself with positive people with an abundance mindset, who have big dreams, those are the people, even if you couldn't in person be around them, just listening subconsciously, like we absorb those things. And so listening to whether it's a podcast, reading books, but if you can physically be in the room, just positive people. It doesn't even have to be wealthy people, just people who have big dreams that are moving the needle, who encourage you to think bigger and dream bigger. That's where you want to be, because once you start believing in yourself that, hey, if he can do it or she can do it, I can do it, and put in the work and don't quit. And that's the biggest key, is people want instant gratification and results on investment. Think long term, dream big, and just always remember that you are capable. And I think the biggest shift is self-doubt and self-belief. If you could just believe that you are capable and you deserve it, that was the biggest piece for me. But once I got through that hurdle, it's like it's limitless. Like my dreams, I don't even have a cap on it. It sounds so freaking crazy, you know? That's what I encourage your listeners to really do, you know?
Really, thank you. That is a wonderful takeaway. I like Oprah a lot, and one of the things she said, I can't remember the exact quote, some of what she said is about self-actualization. That's what life is about, to become the truest expression of yourself. So look inward. That's very important. Yeah. Yeah. So if our listeners want to get in touch with you or follow you, what's the best way for them to do that?
They can get on my website. It's passivewealth23, the number 23.com.
Perfect. Passivewealth23.com. We'll have that listed on our show notes as well. Thank you again, Hua, for spending your precious time with us. Really appreciate it, and you're inspirational as always.
I really appreciate it. You as well.
Thank you so much for tuning in to the American Dream Builder and Investor podcast with me, Missy Liu. We hope you enjoy the tips and tricks that others have used to build their American dream and their trinity of freedom. We would love for you to subscribe and leave a rating and a review. You can also find all the episodes and details on lifemissioncapital.com. Until then, let your life mission go wild.